Hello and welcome to ETBFSI.com. My name is Amol Dethe and I'm in conversation with Mr. Shanti Lal Jain, the MD and CEO of Indian Bank. Sir, glad to have you.
Thank you. Thank you for opportunity.
Thank you. Thank you so much, sir. So I have a couple of questions obviously about hardcore banking and also about digital side. A lot has been happening specifically in the banking space these days. I'm going to, shoot my questions one by one. So to begin with, the biggest thing that we are discussing is, the current state of credit, specifically after the huge rate hike. The banks, financial institutions, as well as the customers, or I may say borrowers, got a great benefit of the moratorium and also the cheap rate in last 2 and a half years. But now there is a significant rate hike. So, what kind of changes are you seeing specifically in the demand right now, sir?
So if you see the last 1 or 2 years, the credit growth is mainly happening in the retail sector. And the credit growth in the MSME is mainly because of the ECLGS 1 and 2. And the corporate growth was muted. But now what we have seen in this current year, the credit growth is picking up in retail sector, in MSME, as well as in corporates. In MSME, because the economy is recovering, the commodity prices have increased. As a result, there is a demand for credits. We are seeing that even in, you see, hospitality and all other sectors also, the occupancy levels have increased. So the demand is picking up in the economy, and we are seeing the growth in a credit. Aggregate level also, you see the credit growth is nearing touching double digit level in the industry. So this year we are seeing that the credit growth will happen in all sectors, whether the retail, the MSME, and the corporate sector. And this year should be the better than the last year. As far as
Okay.
talks about the interest rates and all, because in the interest rate, we are actually normalization of interest rate is happening. But you see, in a housing loan, generally people take 15 years or a 20 years loan. In the 20 years loan, the rate cycle, 2 or 3 rate cycles comes with the rate of interest increases, decreases, increases. But the people are taking decision on a long term. So I'm not seeing any dampener on account of interest rates increase.
Okay. Noted your points. MSME and retail is specifically a different area compared to the wholesale sector or the wholesale credit. So, what are your observations or what are your learnings when you speak to the large corporates? Do you see the industries planning its capex in full speed, specifically after the 2 years of pandemic now? And if you could also give us some anecdotes in terms of wholesale credit, because the India Inc. is kind of pushing hard to build back their capex cycle. So, do you see the sustainability in that segment when it comes to the interest rates?
So as far as credit growth is concerned, you see, when the commodity prices has increased, first the utilization levels of the working capital has increased. First point. Second point is in the credit side also, sector by sector we are seeing growth. Suppose in a road sector, the number of HAM projects are coming. In a power sector, in a ethanol projects, in a PLI sector, somewhere in the MSMEs also. So sector by sector, we are seeing the some growth in the credit. And
Hmm.
as far as the interest rate is concerned, actually around a year back or 2 year back, when the huge liquidity was in there, so naturally interest rate was lower and the growth was also lower. Now when the growth is happening automatically, when the demand is increasing, our interest rates also will be normalized. So it will not have any impact on that, their growth plans and all.
Noted your points, but if I could ask you again, maybe if you could allow me to ask one more question on this same side, what kind of provisions are you making since the inflation is really high, and there are also chances that RBI may increase the rates again because the geopolitical situation is still not under control, and the RBI is actually blaming the inflation or maybe giving reasons of the Russia-Ukraine war specifically as a major reason behind inflation. So as that is not there is no full stop there. So do you see I mean, and inflation is likely to remain here. So what kind of provisions are you making?
See, a year back or 2 year back, right? So the immediate task was to provide liquidity to to the companies or the MSME units because of the pandemic level. So there was a liquidity available in the system. Slowly, RBI is withdrawing the liquidity. This is one aspect of that. Second point is that when the interest rates, the inflation, of course, we are in uncertain times, and inflation is mainly because of the food and the crude oil and the coal and all. So food, what will happen? We are expecting a good monsoon. So maybe after a quarter or so, when the monsoons or the crops will come, the food inflation should come down. And the crude, of course, we are in a uncertain times. So, but as far as the interest rates are concerned, so now the RBI has increased last 50 bips, but still it is lower than the pre-pandemic level. So what happens? We too have increase our deposits. We are in the process of normalization of interest rates, where what happens, the credit interest rates will increase first, and the deposit interest rate will follow. So we have increased our MCLR, our repo link interest rate has been increased, and we also increase our deposit rates. But slowly, this is the process of normalizations, and I think it should not impact the credit, because the economy itself is recovering. When the economy is recovering, naturally your credit demand will increase, interest rate is increased. When the economy is declining, then naturally interest rate will also decline. So with the recovery of the interest rates, so your interest rate increase, your demand will increase, and it will be better for the banks.
Okay, noted your point, sir. SME and MSME specifically is the growth story that everyone is talking about, from policyholders to regulators to bankers. And we have seen the great support to SMEs and MSMEs specifically from the government as well during the pandemic, and the schemes like ECLGS were launched. But what I would like to learn from you, sir, is most of the banks have given or maybe disbursed thousands of crores to the MSMEs, and the total amount is, if I'm not wrong, more than 2 lakh crores, which was in fact the guarantee of the government of India as well. Considering the changes and the challenges happened in particularly this space, do you see any delinquencies specifically coming up out of SME and MSME books now?
So no, I'm just going back to around 2 years back, when the pandemic starts, right? All banks have given the emergency line of credit because that was a necessity at that time. Then the government has come out the ECLGS 1 and 2. So we have given ECLGS 1 and 2 because to provide liquidity supports to come out from that rough time. So slowly, what happens, what we are saying, that since the economy itself is recovering, their cash flows are coming, their receivables are increasing, there's a demand in the economy. So slowly they are coming back to that level. So slowly they will be able to serve our debt. And you see this loan, ECLGS 1 and 2 and all are 4 year or 5 years loan. This is not a 1 year loan where you have to repay entire amount. So slowly they will be generating the surplus and will repay. In addition to that, what we have done, we too have done a restructuring of COVID restructuring in terms of the RBI guidelines to provide them further period of a 1 or 2 years period time within which they should survive, ramp up their production, start earnings, and then repay. So that is a liquidity support provided by the banking system, and we were all expecting that with the recovery, everything should go normal. And the Atmanirbhar package of the government of India, there are a number of other facilities. So we hope that slowly will come out from this issue. But some stress is there also. But with the passage of time, it should come out.
Okay, noted your point, sir. Let me more focus to now a recovery. And since you mentioned the recovery, let me speak something about the bad bank or NARCL. It has been announced long back, but still it's it's still at a distance, though the work is happening there. So if I ask you specifically, have you prepared your bad loans to transfer there? I mean, what kind of loans are you shifting to NARCL, and what kind of resolution do you expect from NARCL?
So what happens in NARCL, first they have around a 2 lakh crore of a loan they have identified. So of this, around 34 loans of around 5,000 crores are identified pertaining to our bank, of which in a first phase around 8 loan of around 2,000 crore was to be transferred to NARCL. So out of this 8, 3 already been resolved in NCLT. So remaining 5 accounts, where the due diligence process has already started by the NARCL. Because what happens, first the due diligence, what is the price, what is the liquidation value, what is the value of the assets. Based on that, we get an offer from the and this NARCL and then shipped to them. But simultaneously, all processes are continued. In my case, also, I told you around 3 accounts have already been resolved. So NARCL is also working. We too are also working on that.
But any other accounts that are stuck with the IBC or specifically NCLAT that you're looking for a speedy recovery?
Number of accounts is NBFC's account is in NCLT big account. That Calcutta based and NBFC's account is in NCLT, which is a very big account. All other accounts are in the process of resolutions in NCLT. This is an ongoing process.
Now, let me shift your focus specifically on the co-lending model, which the financial institutions and RBI has been also talking. Uh, I'm sure you must have partnered with a lot of NBFCs, and the co-lending model has been there. So, but what are the major challenges that you face while co-lending with the NBFCs? On one side, yes, the model looks really nice and very appropriate for both the financial institutions, but there are a lot of challenges also on that front. So, how are you resolving those challenges, and how are you going ahead with the co-lending?
So first, this co-lending model. Basically, what happens? The NBFC's cost is higher, and ultimate customer cost is higher. The co-lending is a good solution wherein 20% of the amount is being provided by the NBFC and 80% of the by the bankers. As a result, the blended cost to the ultimate borrower will be much less. So it is a win-win model for banks also, because the last mile reach of the NBFC is much higher. Their collection efforts are also more stringent, and in the NBFC also, because they get a customer, and the customer's point of view also, they are getting it at a loan at a cheaper rate. So it is a win-win model for all. So that the RBI has came out with the clarifications on the co-lending models. We are aggressive. We are sanctioning the loans to the NBFCs. We are having our own products in collaboration with the NBFCs and are giving. So slowly it is picking up, sir.
On the NBFC side, and you come with a great background and the great experience. So I'm sure your perspective matters a lot, matters the most here. NBFC has been partnering with banks since ages now. In fact, the whole model is depend on the borrowing from banks. They face a lot of challenges also after DHFL and ILNFS, but the situation looks a little seamless right now. But when RBI is actually kind of initiating or taking some notes on in terms of NBFC should not be allowed to issue credit cards unless RBI's approval, or maybe they should think about partnering with banks in terms of the large loans. What is your observation? What exactly is happening with the NBFCs according to you?
I think from the RBI, from the regulation point of view, they will come out with the guidelines to have adequate checks and balances for the customer's interest. I think keeping this in view, they came out with the guide.
Digital has been one of the very, very integral part of the banks right now, and I'm sure Indian Bank has also partnered with a lot of fintechs. How has this partnership of fintechs shipping with Indian Bank? What are the new things that you are doing with Indian Bank and specifically along with fintechs?
Okay, in the digital, we are going with a tiered approach. What we are doing, sir, we are going in all sectors. First is a capacity building. What we have done, from the HR side, we have put 1,000 digital banking officers. We are upskilling our people for change management, because the change from manual to digital. Second, on a technology side, we are doing a number of things. We have already installed our middleware. With the middleware, what will happen? The API integration with the fintechs, API integration with the non-bank players will be easy. So that has already started. Now, second, we are very shortly coming out with this omni-channel, where our customer will get the same experience in a mobile, internet, or a branch or a BC at all point of times. In addition to that, what we are doing, sir, for our capacity buildings, or trade finance solutions for customers, we are coming where the customer can open LCs, guarantees from their own offices. So this is the capacity building point of view. As far as products point of view, what we have done, sir, for a liabilities customer, we have already launched our tablet banking, wherein the customer is not required to come to our office. We go to the customer or institution's office and open the accounts. This is through tablet. Through tablet, we are opening saving account, we are opening PPF accounts. Now, very shortly, we are starting this current account also. So this is in the liability side. In the asset side, what we have done, we already launched pre-approved personal loan, where with the 3 clicks you can take personal loan from our bank. We already started, and quite a good number of accounts have been sanctioned. We have also sanctioned the ACC renewal with the 3 clicks. Shortly, we are coming out with a digital gold loan, digital mudra loan. So we have a plan for each quarter. This quarter will go, this next quarter will go with the housing loan, auto loan, or other loans. So that way we have planned, and we have done a good collaborations. We have engaged BCC or a technical knowledge partner in this regard. So we are moving in these directions. In all side of the business, whether liability or assets, we are very aggressive in the digital side.
Right.
And recently, what we have done over in March, over this mobile banking was 65. Now it is 96 lakhs. So that way, in the last 2 months, we are very aggressive in mobile registrations, because if you have a mobile banking, naturally, all kind of banking you can do your own home. So we are focusing on that.
So most of the banks have started disclosing their digital numbers. So if I'm not wrong, few banks said that the XYZ disbursals came through BNPL, buy now pay later product, or digital lending product, or something like that, or maybe they opened XYZ number of accounts in this quarter through their mobile banking app or something like that. By any chance, do you have any numbers or something like that, or maybe do you have any projection in terms of how much value digital will add to your balance sheet going ahead?
Yeah, point is that our digital transaction, which was around in March 21 was 60%, and March 22 it was 77%, which we have disclosed in the. Now, after the results, we will also disclose about our number for how many accounts we have opened through tablet banking, how many accounts we have opened through pre-approved personal loans, how many accounts we have opened through digital KCC renewal. These all information will share after our results.
Last one or two questions. So it has been a long time now since the merger has happened, and I think the balance sheet has been combined together. How is it now? How do you feel? Do you feel that it's a significant development specifically after the merger, or you still feel challenges in terms of collaborating from maybe Allahabad to Chennai?
No, sir, because a bank is entirely amalgamated, and you see our results quarter after quarter. Our profitability is increasing, our spread is increasing, our gross NPA is coming down, our net NPA is coming down, our capital adequacy is improving. You see our growth. In the retail, we are growing 15%. In agri, we are growing 12%. In MSME, we are 60%. Our operating profit has grown by 16%, or our net profit has grown 31%. So all sectors we are growing. So amalgamation we have completed fully, and now we are moving towards the giving results based on the synergy. And you see our CASA is also maintaining around 42%. So bank is that way growing both in asset and liability side, and the profitability and the capital.
Okay. Give us some sense on the hiring also. So a lot of PSU banks have also started hiring, external resources or the consultant. They're also believing in lateral hiring right now. What are your plans?
We too, we actually, this is the need of the hour. Because we need a person in digital. We need a person in business as well. So we are also open to hiring the laterals, because we need an experienced person. So we are, based on the need, we are coming in the market for hiring the people.
Okay.
And our endeavor is to get more and more experienced people, so that we will grow, because we are having our own experience, and the market experience naturally will give a better results to the organization.
Now, let me come to my last question, and then I will listen to you if you have any other thoughts if you want to share. So, I mean, maybe not a straightforward question, but let me put one or two thoughts together. Considering the policy rates right now, which are still below 5%, despite significant rate hike by the RBI, the rates are still below 5%, which is still lower than what it was 2.5 years back or before pandemic. We discussed that. This is one story. On the other side, you are saying the demand is still very high, but the reality is inflation is uncontrollable. So, what is your sense? At what level will you be comfortable when it comes to the policy repo rates? Will it be 5%? Will it be 5.5%? I mean, or 6%? Because it is very visible, or maybe strongly visible, that RBI will increase the rates going ahead, and there will be a pressure on the banks also to increase the rates. So, what is the comfortable level that you see for you to look at the policy rates?
No, we are taking our decisions for increase in the deposit rate and the lending rate based on the demand of the credit, based on the liquidity position, and based on the market competition. These are the 3 or 4 factors. Based on that, our ALCO will decide. Since when the economy is improving, when your credit growth is increasing, naturally your demand will be increasing. And when your demand is increasing, your interest income will be also increasing. And the increasing interest scenario, when the loan is repriced first, your income will be increasing. So we will follow the market trends basically, and based on the demand, we will take a call here also. And deposit, because based on the credit growth, we take deposits as well, because we have to, and deposit rate follows the credit rates. So as the market will be increasing interest rate on deposit, and our liquidity position will take a call. So bank, we are managing the risk. So we are managing our interest spread, we are managing our margins. So we our focus will continue to remain on that.
Okay, noted your points, sir. I'm done with my questions. Anything that you want to add? Anything that you think I missed, and maybe you want to share your observations with on any side? Anything that is interesting that Indian Bank is doing, or maybe you want to share?
So from the Indian bank side, I can say that from the both liabilities and asset side, we are growing. We are growing in all products. Suppose we are growing, our plus point is 61% of our advance is in RAM sector, retail, agri, and MSME. And retail sector, we are growing 15%. In retail, we are growing in housing loan 13%, in auto loan, in a personal loan, in a jewel loan. In all segments are growing. Likewise, also in a agri credit, where we are majority of the agri credit is a jewel loan. We are growing good. So it is agri is growing 12%. In MSME, which was around a 6%. Now with the recovery of economy, the growth will also happen here. So then that in the RAM, which has grown 11%, will grow more here. More here, and the corporate demands will come. So naturally the credit growth will be better in this year as against the last year. As far as our deposit franchise is concerned, our CASA, we are maintaining around 42%, and our CASA growth is around 8 or 9%. So, and we from the digital side, we are underwriting our deposit products through digital channels, and now in credit side also we will be going digital, and bank is totally focusing on digital. We created a digital lending cell in our office. We have created a analytics center for excellence, because we are having a huge database. Based on database, we will generate the cross sell opportunities. We will sell the sale opportunity in credit side and the liability side. So bank is focusing on all, and going forward, bank should do better results.
So that's it from my side, sir. Thank you so much for your time and sharing these inputs here. Thank you so much.
Thank you for the opportunity.